I am not emotional about the money.
If you wish to be the king of the jungle, it's not enough to act like a king. You must be the king. And there can be no doubt.
There's only one rule in this fucking jungle. When the lion's hungry, he eats.
We don't fuss, straight up, no talking, he get touched. Straight up, I can't smoke my arms.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. So we have a highly volatile environment still. This morning on Bloomberg, the narrative this week is the market's nervous about Powell getting fired. That's all they could talk about. You know, look, you're always going to have some news media narrative because they have to explain when price is going up. Oh, it looks like uncertainty is being priced out of the market. The bad news is baked in. Plus, so-and-so just had a good earnings report. When the market's going down, they have to have a reason. The market's nervous about Powell being fired. You'll hear people on YouTube talk about manipulation. You'll hear people talk about dark pool money. There always has to be a reason. But the reason is, as you guys know, the macro overall has a ton of uncertainty. We have trade negotiations going on. We have massive high tariffs right now, which are going to be negotiated down, but so far they are not. And so you have a lot of uncertainty and a lot of different market participants believing different things. The ECB just cut rates again, right? The ECB cut rates. Lagarde said, the head of the ECB, specifically that tariffs are deflationary. The neutral rate does not apply. Tariffs are a demand shock. She is absolutely correct. That is basic economics. However, Powell holds the opposite belief that tariffs are inflationary and that apparently it's going to cause the Fed to deal with much higher inflation down the road. So I think Powell's wrong. I think Lagarde's right, which is an interesting dynamic in and of itself based on market history. But we need to look at the charts because you're getting a lot of volatility up and down in this space. And what are your key supports? What are your key resistances? That's what we need to determine. So we're going to go ahead and decipher that today in the video, the levels for you to watch, because I do believe once we bottom, and the bottoming is a process, but once we bottom, we're going to have much higher targets ahead, even if it was only to a lower high because you believe the market is going to self-destruct. There are much higher targets ahead, especially if you see the market the way I do, because I'm very constructive on it, looking at 7,000, 7,500 on the S&P, going in for a blow-off top. Lee, let's start the show. Guys, if you want to support the channel, check out SimpleFX. If you live outside the US, trade all the markets, get our VIP bonus and tournaments. And if you want to trade crypto with no VPN, no KYC, most countries in the world can use it, including the US. Check out the Bitunix link in the video description as well. Let's talk about where we are in the markets right now. The markets are selling off. The key thing to note here, right? The thing you want to focus on is your key support levels, your key resistance levels, because in between you have a day trader's dream. You got a lot of chop, a lot of volatility. Seems like so long ago we just had the God candle where you got a year's worth of gains in a single afternoon. Understand that velocity, a year's worth of gains in a single trading day. You have opportunities here for big moves up and down, but to what point, right? When is it too dangerous and where's the resistance at? So we're going to look at this. But first I want to zoom out here on the S&P mini, all right? This is S&P futures, ES1, continuous chart. We're at 5135 as the crow flies right now. Couple of key things to show you here. I think the recession's being priced into the market. You can see that over here with the pandemic. 36% decline in 34 days. And of course, all through 2022, a 27% decline. It took 280 days. What do we have right now? We have almost a 22% decline in just 48 days. So what we want to see is if we're going to hold this low or not. What are some clues? Market loves symmetry. If you look at our wave one up from the pandemic low, there's your wave two down in the retracement. we hit the 50% almost to the dollar, right? The 50% mark. Then we went up on our big wave 3, and now we're here on our wave 4. So let's look at this. Let's just measure this, because we hit once again the 50% almost to the dollar. We went down to 48.32. 50% retracement is 48.34, within $2 on a $4,800 asset. If we were to retrace deeper, if we take out the low, this is a zoomed out view, 45.19. So let's call it 4,500. What would that do as far as looking at the geometry here in the marketplace? If we were to retrace deeper, that is a 27% decline. Does that number sound familiar? 27%. What do we do over here in 2022? 27%, right? So again, symmetry and a decline. If it was to take that out, you're not in danger of doing that at the moment, coming to that 4,500 level, but that is always an option with this volatility. Understand the macro, guys. We don't know when the trade deals are going to get announced. We don't know how far along the trade deals are. We're in a 90-day moratorium on the tariffs. So right now the base tariff of 10% is on. Negotiations are happening with Japan, happening with India, South Korea, and 70 other countries. So at any moment, and that's what people who do charts, especially YouTube people, hate to tell you, at any moment, a tweet, a post, a Truth Social post can come out, and it can cause a massive rally, just like the God candle rally, based on a single sentence, okay? So at any moment that can happen. When is that? Nobody knows. So what we want to look at is our key supports, but understand, the markets are forward thinking. And that's what this is. When you're looking at this decline right now of 22%, the market is pricing in the chance of a recessionary drawdown. Why do I say that? Because every single recession since World War II has had an average of a 34% drawdown, 33, 34%. And as you can see in this modern cycle, in the 2022 recession, which again, we had to change the definition of a recession to tell you that it's not a recession, and the media was complicit in that, but this went down 27%. You could do that again and come down to 4,500. But what happened after that? That's the key thing. What happened after that was a massive leg up. Guys, when I look at things like M2 money supply in the marketplace, liquidity in the marketplace, when I look at things like unemployment, here's your M2, you're $50 billion away from taking out the all-time high in M2. We have deregulations being passed. We have a big, beautiful tax bill that's going through, that's going to be passed most likely. And when those things get passed, combined with the liquidity of M2, and the Fed eventually will cut. And if the market sniffs it out that there's a cut coming, trust me, that's going to be bullish as well. All the pessimism is being priced into the marketplace because of fear. And again, because of that stupid word the media loves, uncertainty, right? That's what's being priced into the marketplace. But the market, being forward thinking, does these retracements to allow the next leg. And again, even if you think the next leg is going to be a lower high, you're still looking at a 700-800 point price appreciation from this current level. So let's go ahead and look at this. If we hold this on the daily time frame, here's our current low, the 48.36. If we hold this, you're looking at the 618 at 5,100, 72% right around 5,000, okay? 5,100, 5,000. That still gives you a double bottom structure, a W type structure if this holds. If it does not hold, that's when you're looking at that 4,500 coming down. Now, I told you last video, I would prefer to see this retrace. This is healthier to get this retracement. It is not as healthy to pump up from this higher level here. You want the rubber band to stretch backwards, right? So let's say we hold 5,100. That's your next move, up to test the 200 right around 58.50. That's also, if you believe the market's going to roll over, that would be the time for it to do that, okay? It's right at the 200, right at the base of the topping structure. I think you're going to get a pullback, and I think you're going to go up. The question is the timing. The timing is the hardest part. If you just want to do timing based on seasonality, if you just want to do timing based on something specific, like, well, when will the tariffs be announced? I mean, how do you time that? How do you time what the post is going to be that sends the market into a tizzy? So what you need to look at is your key support, key resistance levels, because ultimately, guys, price will reflexively rebound, dead cat bounce, whatever you want to call it, but it will test it will test the strongest resistance levels after making that top. And that's going to be up around that 200 again. It won't just keep rolling over, rolling over, rolling over. And if it does, it makes it easier to trade. If we get this exact same retracement that we got in 2022, the exact same to the 618, looking for confluence, to the confluence of market structure, looking at your July 2023 high, and to the confluence of the geometric decline, the declination of 27%, that to me is a very easy trade to look for a bottom and long it, okay? So what I'm looking at here is just seeing if we hold the higher low structure at 48.35, because I think this is going to be a fantastic opportunity to get so many things at fire sale prices as we see price decline. Now, when we look at our pivot cycle, we have Monday the 28th. We have the next pivot cycle. I believe that's once again a weekend cycle over the weekend. So Monday the 28th. So we could see this volatility, this declination up and down throughout this week, and then possibly looking for a bottom. Look how the last pivots played out. The exact bottom, close to the exact top, close to the exact bottom, close to the exact top, close to the exact bottom. And again, now we have the next one. So let's see how that plays out. If we get more chop this week. Ultimately, though, just the spring concept, you're going to have an attempted rally. Question is, do we hold 48.36? That is like the $1 million question, because if you come down lower, everything's coming down, versus if you start holding this and chopping around in here, make a bottom structure, some type of breakout point that we can trade off of, this would be extremely bullish for the marketplace with all that negativity, all of that fear baked in the market. You look at this on the NASDAQ, same thing. Your key levels are 17,578, 17,280 just beneath you. You're at 17,708. So we'll see what this does over the course of this week if it chops around. If you take out that low of 16,450, that's when you want to start looking at what is the S&P doing to determine where the NASDAQ's going, right? So you need to look at this from a zoomed in perspective, zoomed out perspective. I think both are very important, but I'll be doing another update, of course, on Thursday, and you need to follow me at X at Market Canary, because I'll be talking about key levels, and consider checking out marketmakers.trade if you want to talk on a daily basis. Let's look at this on Bitcoin. I mean, look, part of the reason, guys, I'm really constructive on the market once we push through this sell-off, right? Once we push through this declination, is Bitcoin is still sitting here at almost 87K. So you got Bitcoin at almost 87K. Bitcoin should be falling apart. Right now, Bitcoin should be closer to 72K. It's up here at 87K, 86.8 right now. So it's closer up here in this upper range. This is a high beta asset. Again, highly volatile. No, I do not believe Bitcoin's decoupling and is a source of value. It's a highly beta asset. Why do I say that? Because just look at the recent market history. When did Bitcoin top? November 2021. What else topped? The NASDAQ, the Russell. What did they do? NASDAQ fell 38%. Bitcoin fell, whatever that was, 77%, down to 15.5. And then what does everything do? It rebounds, right? So we're seeing the same thing play out, but you're seeing Bitcoin hold up. It's a liquidity barometer for the marketplace. Your key support is down there at 72K at the 618, 72, 66, and you're at 86. So you're up here in this upper echelon. If Bitcoin can continue to chop up here, again, very bullish, because that next move, even if it was only to a lower high, is still going to be a nice move to be involved in here. And I do think you're going to get your blow off top. So your double top structure, your three wave structure, even if you were going to lower high top out, it's going to look something like that, right around 100, 101K. Then you would roll over and confluence with the markets. But I think you're going to get that move up to the 132, 143 move. That's what I think you're going to get, because the recession's being baked in the market right now. Let's look at this on the daily. What did you hit? What did you retrace from? The 200 again, right? So you were rallying hard this morning before the market started pushing and selling off pretty good, but you got right up to the 200. Again, you took out your downtrending trend line. You're still above it. Your lows down here are 74.5. That's your current low. You're at 86,790, basically 87K. So look, this is very bullish to be up in this range, given the amount of volatility and the amount of selling pressure and the trillions that have been washed out of the market on this declination. So the key levels of resistance are above you is right there at 88. Then you have that magic number of 92. So those are two levels to flip, your key support levels. You want to hold 79. You've got candles below it. Most of your candles are above it, as you can see here, 79 being right here. So most of these candles are above it. You want to hold 79, and then you have the 618 at 72. I'm not in any type of panic mode unless you start taking out these levels and take out the 618 at 72K. Then you can start looking at, okay, what's happening in the market, right? That's what I would be looking at. Let's look at gold real quick. Because as you can see from my little gold box over here, my little kill box, if you will, this is something I put out on X, something I talked about in the Discord, but this was the target range we were looking at. Gold futures, 33.79 to 34.59. You're at 34.36. Gold futures, if you can flip 3,500, come up on top of it, it's going to open up your next level, that 37.50 range, if you can do that. But we're going to see if it can do that because you're hitting a lot of key geometry in the marketplace. 100% increase from bowl to bowl of accumulation here. 61.8% increase to where price is right now, okay? Let's look at this on the CFD price. That's your 33.46 to 34.52. You're at 34.26, right in the range again. Remember what I'm looking at on a declination. We went over this in my gold cycles video, but typically you get 7 to 8 weeks in a gold parabolic move going back 25 years. You get 7 to 8 weeks. This week is the 8th week. So you get 7 to 8 weeks followed by an average on the low end. So I'm saying average, but it's the low end, followed by a low end retracement of 20%. Look at that. Exactly 20% right at the 382, 27.36. So the key is, I don't just trade off of hitting a magic number. I want to see a top form, right? If we get a top forming on gold, this is the next leg down here for a retracement. But overall, all the markets, including Bitcoin, are doing the same 3 waves to a top. You have your wave 1 up. You have your wave 2 up. You have your wave, your third wave up will be after your retracement. So you have wave 1, wave 2, wave 3, 3 waves to a top. Here's your, if you're going to count this like Elliott wave or a 5-wave fractal, that'd be 1, 2, this is 3, and then this is 4, and then this is 5. Okay, so you get these counts however you want to count them. I'm looking at the Fibonacci. I'm looking at the 3-wave, 5-wave fractals. Ultimately, this should retrace. If it does the 20%, this could be a fantastic trade. And if it starts coming back up, that's how you get the 4,000 gold, right? That's how you get the 4,000 gold. You get the cool off, you get the accumulation. Gold could do this for a period of weeks, months, who knows? Or maybe a very short period, but I think you're going to get the sell-off once this thing tops out. What about the GDX? That people asking me about this. Oh, here's gold on the daily. This is gold futures again. If you look at 37.78, you're up here at the 2618. Can it get there? We shall see if it can get there. 34.37. It's going to have a lot of resistance. We start looking at this from some of our indicators. Money flow is what I care about. You're getting divergence already on the daily, right? Daily on down, daily all the way down to the 3-hour time frame. You're getting divergence. Your high was already put in here April 2nd. You got divergence on your money flow. Fewer people are paying higher prices for gold. That's why it's still going up. It's the #1 bullish trade according to the Bank of America Fund Manager Survey. Your ADX is telling you the momentum's still good. However, we look at accumulation distribution, and once again, you need to take out this high right here. This high needs to be taken out. You're getting a lot of deviation, a lot of volatility. This is what you start to see at topping structures and marketplaces if you don't get a consistent high, low, higher, higher low. That's a trend, right? What you have now is deviations up and down, a lot of money flowing into gold. And guess what? I know it's not retail, right? But it doesn't matter. What matters is who's paying for it and how much they're willing to pay. There's money flowing into it, but the money flow is telling you it's not making a new high yet. And this could reverse, but you have bearish divergence already showing on the money flow. You can have bearish divergence, as you guys know, a long time. I'm not a divergence trader. It is just something to give you confluence because, again, I'm looking for this top and I want to see where gold gets to by the end of the week, especially if you consider it from this perspective. What happens if we get our bottom on the S&P and it starts chopping sideways? Do you think more money is flowing into gold? I mean, that may be your view. It's a valid view. I do not. I think money is flowing out of gold into the depressed stock market, especially as good news catalysts come into the marketplace. People want the discounts on the Mag 7. They want the discounts in general on these stocks. And I think you'll see the markets lift, and I think you'll see gold top, and that's how you get that drop. Doesn't mean it's crashing. Again, if you watch my gold video, a normal retracement that it has done over and over for 25 years after these 7-8 week moves. What about the GDX? The GDX hitting my key resistance at 52, which is the 1272. If gold wants to proceed to go up to 3700, 3750, looking at the GDX probably around 61. It's at 51 right now. That's my 1618, but you hit the 1272, you got rejected. If you stay below here and gold starts topping soon, then you need to start looking in the low to mid 40s for the GDX to retrace to and come back down this way again, okay? So again, just pay attention to the macro, pay attention to your own narrative, try to listen to dissenting voices regardless of what your view is, because maybe you missed something, right? I do it all the time. Most of the people I listen to, I disagree with, but occasionally there's people that I'm like, that guy's really smart, and I agree with him. And so I feel a little bit more confident and comfortable in some of my views. But ultimately, guys, this is all about looking for your right entry points, whether it's a short, whether it's a long, and what you want to track. Don't get married to anything in this market. See you guys on the next video. Be sure to like and subscribe.